Perfect. Well, okay. So good morning and good evening, ladies and gentlemen, and welcome to our last FinTech Friday session. My name is Karil, and we have a great session planned for you today with an amazing panel of experts. But before we start, just a very quick reminder to keep your microphones on mute and to rename yourselves to include your name and institution so that we can easily identify you when you ask questions to the experts. We will be offering interpretation services in Spanish. So to join the interpretation service, as you can see, please click on the interpretation icon at the bottom of your Zoom screen. If you are on a mobile or a tablet, click the three dots to find the service. Next, choose your preferred language. You can also choose to mute the original video if you would like to. Participants who would like to listen in Spanish must select Spanish, and those who want to listen in English don't have to do anything because the main session is going to be in English. So the business case for serving women with better financial services is clear, with women projected to control over 216 trillion in global wealth. A compelling opportunity for fintechs to unlock a massive underserved market. Research into fintechs and the female economy in 2021 by the Alliance revealed that fintechs risk missing out on this potential by not being gender intelligent, with a significant 27.6% gender gap in fintech usage, 3 times the gap seen in access to formal accounts. One of the biggest factors driving this gap is that many fintechs focus on young urban men as early adopters and design solutions that resonate more with male audiences. Second, there is a limited or lack of research-based understanding of various segments, behaviors, and needs, in particular women. And women and men process information and make decisions differently. So ignoring such nuances when designing the user experience causes more women users to drop off across different stages of the sales funnel. As fintechs continue to disrupt traditional finance, those building gender-intelligent customer value propositions are leading the change in closing the gender gap in financial access and usage. So by understanding and addressing the specific challenges women face in financial services, fintechs can foster deeper customer loyalty, drive innovation, and capture untapped market potential worth trillions globally. So our analysis found that by increasing their female customer conversion rates to levels equal to male conversion rates across the sales funnel, fintechs could see a 70% increase in revenues. The objective of today's session, Key Steps into Designing a Gender Intelligent CVP, is to showcase best practices and lessons from fintechs that have successfully tailored products, services, and marketing strategies to meet women's unique financial needs and behaviors. And to do just that, we have an amazing panel of experts with me. So Sairee Chahal, founder and director, Mahila. Alexandra Mendoza da Castro, president of the board of Colombia Fintech and founder and CEO of Liquitech. So she'll be wearing the two hats today. And Juan Urrea, head of customer relationship. I'm going to stop sharing my screen. Okay. And then what I'm going to do is I'm going to give each one of you maybe 30 seconds to briefly introduce the organization you're presenting. And Sairee, I'm going to start with you.
Thank you. Thank you so much. Good to be here. Hi, everyone. I'm Sairee Chahal. I'm the founder of Mahila. You can call us a neobank for women, but you could also call us a platform for financial services for women. We offer productive loans to women running a small business, women entrepreneurs, as our core product. And then we have a range of products around that. But the interesting thing we've done is we're building Mahila more like a community platform, so certain insights for the segment. Before this, I built a company called Shiros, which is actually one of the largest networks for women online, about 27 million users based in India. And that's what I've done, and taken some of the insights from having built an internet organization for women into financial services. So I'm glad to be here.
Perfect. Thank you so much. Next, Alexandra, can you maybe introduce yourself very quickly and organize both organizations you're representing today?
Yeah, it's a pleasure to be here. I'm Alexandra Mendoza. I am the president of the board of the Colombian Fintech Association. So we have a lot of data and information on how we are evolving with these genders challenges that we have in the industry here in Colombia. And I'm also the founder and CEO of Liquitech. This is a fintech of factoring that have been leading to promote financial inclusion for SMEs in Colombia and trying to have an impact on women. I'm going to tell you later, but this is like the very initial abstract.
Perfect. Thank you so much. And Juan, the gentleman of the crowd.
Yeah.
Thank you, Carol. Thank you, everyone. Thank you for to Financial Lives for Women for inviting us. I'm Juan. I'm head of customer relationships for Juancho. Juancho is a fintech focused on personal loans, looking to enhance quality of life for underserved populations here in Colombia. And within that spectrum, we have come to implement some very particular product for women. So based on that, we've had a close relationship with Financial Alliance for Women over the years and with Colombia Fintech. So yeah, we're glad to be here and to be able to share how we've done that.
Perfect. Thank you so much to all three of you for being here today. For some, it's Friday night. For others, it's Friday morning. So both ends of the spectrum here. So I actually want to go and dive straight into the topic with a question that I have that's common for the three of you. What are, according to you, the top 3 key steps in developing a gender intelligent value proposition, and why? Sairee, I'm going to start with you.
Sure. Thank you. Thank you. So I have to say a lot of what I have learned building products for women has come from a lot of historical data. The truth is there are some new insights, but a lot of them come from this giant industry called microfinance. And if you know the history of microfinance in India, it actually served women 99% of the time. So, it's almost 60-70 billion dollar industry today, but women are the primary customers. And I think the biggest thing we've learned is trust above everything. When we are designing products for women, trust is actually the number one sort of factor. We also have to keep the demographic position of women in mind. For example, in a lot of economies, women don't own assets or their access to capital is limited. So demographic position, trust as a core factor. And then, of course, I think some behavioral insights, which are really interesting. For example, women are a lot more social, women confer more with their friends and their peers about making financial decisions. So those are some, top 3 things as at least from where I stand. Make products social, make products high trust, and go deeper into the demographic layers to understand the position of the user.
Amazing. Thank you. Alexandra, I want to turn to you and ask you to build on what Sairee said and what you see from your end. You're on mute.
I think that, and in the way that we have been leading this in the Colombia Fintech Association and in other communities that I have been participating, is that we need to create spaces in which women can connect, can be empowered, and can receive education. I think that these 3 aspects together combine not only the idea that women are seeing how other women have been doing the business or have been doing the tasks, in the example of how they have been evolving, doing maybe things that they think they weren't capable to create or to get. So it's important how they get to the race and how in that example, I can feel inspired by other women that have been doing what I thought that I wasn't capable of, to complete. So that's why this kind of connections and associations and this work together, it's really important to point out, not only for each individual company, but also for the total ecosystem in which women can feel empowered. In the way that you connect with other women, in the way that you feel empowered by other women, and in the way that you receive education on how they can be more sophisticated in hard skills and then combined with the soft ones, I think these three aspects are really, really crucial for the development and the inclusion for the women in this industry.
Okay, perfect. And I love that each one of you had complete different 3 points to add.
Yeah.
Juan, you have the most difficult task of adding on top, or maybe sharing some of the common points that were already discussed as what you think are key components. Just to make sure you are on mute as well. You're on mute, Juan.
Thank you. I think we all have three components that are very related to our individual experiences as people and also in our organization. So, but maybe deep down they connect. For us, I think, and from my perspective, there are three stages for this. First of all, of course, and this is not even a stage, but it's to have a gender focus. Because without that, you're nowhere. But then after that, you need to look at data. You need to be able to access data. If the data is in your own processes, you need to make sure that your processes are set up in order to record the data that you know that you need, that you're gonna need in order to make decisions. And then you need to be able to interpret the data because you're gonna get trends. For example, in financial services, you get a lot of trends. It's easy to segment users based on their transactions and the money they make or whatever. That's pretty easy when you have data set up. But then to make sense of that data is not something that you should do just guessing or thinking that you're an expert or hiring a lot of experts. You need to actually speak to your users or to the segments that you're trying to impact with your actions. So there are methodologies associated with human-centered design thinking, stuff like that, that enables you to ask specific questions and to get insights that are going to be able to give you actionable items from a business perspective, from a product perspective, and customer service perspective, and so on. And that's why your third step should be decisive on that data. You don't need to change your organization overnight. You don't need to be the most innovative place on earth, but you do need to understand the signals that you're getting, the causes for those signals, and then be able to adapt your business to that. So I would say those are the three key points that I would highlight from my experience and our experience as launching.
Amazing. Anybody wants to add anything to the list before I move on to my next question? Okay.
No, I think we have covered different points.
Very much so.
Yeah.
Sairee, I want to come back to you. So when you were designing Mahila Money, did you carry out any research into understanding? You said you microfinance and a lot of the historical data that's there and the information is important. But did you do any research to understand maybe the behaviors of women that they have, the behavior they have with money, and did that impact your design process?
Yes, absolutely. Actually, lots of learning before we actually built the company. So let me share a small story around how we set up Mahila Money. I actually used to run Shiros, which is the company I built before this. It's a social network for women with a lot of super app features built in. You can find work, you can find counseling, you could find skilling, you could post content, you could make friends. So it was a safe space to do a lot of things. There were no transactions on the platform and there was no money exchange happening. But we did introduce a commerce feature to test, and it was a COVID project because a lot of people lost jobs, a lot of people lost livelihoods in COVID. And one of the things that happened was, once we introduced commerce, there was buying and selling between the members. So basically, social commerce, as they call it now. And, when we set that up, a lot of women actually wrote to me to say, hey, we're undergoing some hard times and we need capital. Our business needs support. Can you give us some loans? So obviously the company didn't have a mandate to do it. I set aside some personal amount. I put some money in a new bank account and we create an Excel tracker, and we invited applications on a Google form to say, hey, please apply here. And, so that's how actually we started My Money. We started it on an Excel sheet. But the big learnings were as follows. One, for women, there's a lot of social risk that they want to mitigate. So women never want to fail at financial products. Like they don't want to take a product which is very high risk. They don't want the matter to reach their family at all. So traditionally, and this happens in developing world a lot, LATAM, Asia, that banks will say, go bring a male member of your family, go bring your husband, go bring your brother. You don't have assets. How will you repay? Your business is too small. So independence, risk aversion, safety, these were some very recurring themes when we were designing. And the other is, I think, just being able to get information without being pushed, like the ability to understand a product before designing, before deciding whether you want to take a loan or you want to sign up for a credit card or something like that. So when we were designing Mahila Money, a couple of these things became very important. The first thing we did was we made the platform video first. So we brought in a layer of trust using video. So our app has live streaming features, which means our team can literally set up a call like this every afternoon and invite our members to join. And this is now literally on the app, right? So no link sharing needs to happen. And that has become like a digital version of a bank branch. I can talk to a human being and ask a question. And when I'm asking that question, a lot of other peers are in the room. I'm not the only one. So again, safety kicks in. So video was one key factor. Two, we didn't account for speed. I know traditional fintechs would say you can apply for a loan and get it in same day. You can apply for a loan and you don't have to talk to a human being. It's all automated. While those are features on a different environment, at least in our setting, it didn't seem so. And the other thing sort of we realized was women want a long-term relationship. Like once they've invested that relationship, they want to sort of make sure they can extract more value out of it. So as a platform, we just didn't design for selling a loan or a financial product. We designed it for engagement. We designed it for you can come back to us for more than one thing because you've already made that investment in us. You know us and we know you. So one of the things we do for our members is a lot of business support. We have a business helpline, we have content, we have a lot of social events, which are, think of it like Y Combinator style learning format. So we do a lot for our members, which has nothing to do with financial services. But this is to make sure their ability to trust the platform and to stay with us for a long period of time, not just their first loan or second loan, but as long as they run a business, they can sort of rely on us. So our insights basically say, build for engagement, build for safety, build for trust, but also make it very easy to use. I think the benchmark today for products is Instagram, WhatsApp, Facebook, YouTube, super easy to use products. They're super intuitive. And those are sort of, learnings for us. Keep it so simple and keep it very, very trustworthy.
Amazing. Juan, I wanna jump to you. When JuanchoTePresta was designed, did it have a gender lens from the start? Or was it a gender intelligence strategy that was adopted later, after, the fintech starting? And in case it came later, the main question is, were there key differences that you carried out to make that shift? And did you face challenges, and how did you address those challenges? It's a bit
Okay.
long question.
And I'm gonna add something else.
Okay.
Because, I think I just to be sure that everybody knows what are the gender like approaches that we have. So I'm gonna start with that, and then I can get into the
Okay,
question.
perfect.
So basically, what Juancho's done is that Juancho, as I mentioned before, it's very focused on the loans, personal loans that enhance the quality of life of people. And in that sense, we don't market our product as product to it's a consumer's loan. You can use it in whatever you want, but we don't market it as something that you should use, I don't know, for a vacation or just to party, stuff like that, which is something that might happen, but we'd rather market it as loans related to maybe you can qualify yourself better for your job, or you can enhance your means of transportation, or you can do adjustments to your home where you live, that kind of thing, that it's a long lasting impact in your life and your family's life. So that's the first part, just so we're aware of where we are. When we look at that kind of uses for loans, that's much more, the actual use that women give to those loans are very similar to what we are trying to achieve with our product, right? And that's like an affinity that came kind of, we started coming across that affinity as we went, but we also, from our previous experience, we already knew that when you looked at the loan book and how different segments behave regarding the payments of the loan, that's something that also women were more behaving better than than men, and in some segment of women especially. So what we started doing is that we have differential costs as well for women. So you can expect to pay if you're a woman, you can expect to pay between 8 and 18% less for your monthly payment with a loan with us. So that's a difference, because it's also an underserved population, right? So now this is sort of the context that I wanted to give, and then the answer to the question is, as usual, is a mixture of both things. We were already aware that that women paid better, the payback for the loans was better on average. But then we started realizing on the way that they also were more acquainted with the product that we were trying to place, because quality of life is something that they're very family focused, at least. Yeah, that's something that we can find here, at least in Colombia. Of course, this varies depending on many things. They're very family focused. They're usually the support for the parents or the children, or even if not, they have a couple pets or they have friends or whatever. They're very community focused. So they usually are, they have an impact not only on themselves, but on the community. So we're starting to see those two things, and we realized on the way, this is not something that we were doing from day one. Okay, we need to be focused. We need to be focused, gender focused on our communications, on everything we do, on our, even the product, we named it differently. So we started doing like a whole operation, and also our metrics, going back to your first questions, are also like segmented, and we want to understand how women behave differently in all our in all of the life cycle with our company. So that's how we focus. I think that you need to have some insight at the beginning, and you need to be open at the beginning, but then again, you build these things on the way, and with the data of your users and being on the street and understanding and having the product being used by women, that you can do it on the way. Okay.
Amazing. Amazing. Thank you for that, Juan. Alexandra, I want to come to you. So Colombia Fintech has a clear gender agenda. So what led the association to adopt such a strategy? What does it entail? And what progress has it made among fintechs across Colombia?
Yeah, it's important to point out here that Colombian industry, in terms of fintech, has a lot of participation of women in their founders number that have been encountered. There is a report, the Colombian Tech Report 2023-2024, gives results that that are in Colombia, 23% of companies founders are women. So but if we go to fintech industry, this percentage goes to 42% in 2020, and in Latin America it was 40%. So we have been seeing that Colombia has been leading a very important and interesting percentage of women getting into the business, getting into the industry. But the most important thing here is how we increase not to increase only the number, is how they can stand and they can take their business to another level. Because what happens with this industry most of the time is that they don't get access to investment, they don't get access to enough capital, they don't get access to financial solutions. So that's why through Colombia Fintech, we are trying to lead, and we are trying to give these women all the tools that they need to take their companies to another level, and they can have these essential skills that are required to grow in the business. So it's also important in this study, we also saw that women, completing what Juan was saying, no matter that they have maybe less opportunities to get access to capital, for every dollar that women has received in fintechs, they generate 78 cents in revenue compared to 31 cents that generate a company that was led by a man. So we are seeing that women are doing very interesting things in the fintech industry, and that's why the association has been trying to empower, trying to focus in all the verticals that the association has. We have 9 verticals in total related to different lines in the fintech industry, and we are trying to, in all these verticals, trying to promote, to empower, to give all the tools that in the way that I said before. Women are capable, women are recognized, women are shown as visible to get access to capital, to get access to grow, and to get access to continue growing in the industry. So that's what we are trying to do in the association.
Amazing. That's great. And those are some really striking numbers. Women making double the revenue than men. I think that's that's something that's worthy of noting. Sairee, so I want to come back to you, and because Juan was talking about marketing and communication and how they tweaked it and to make it more gender intelligent. Now, I want to come to you. I know that your companies are destined for women, but you also said something about, trust and really getting them. Yeah. So what is an effective marketing campaign and a tactic that you say works and that Mahila Money and maybe Shiro's as well in its days put in place to attract female customers?
Great question. I think one of the things we've learned is, women are very engaged consumers. So, I mean, even if we step outside of fintechs for a minute, their consumption of content, their preference for brands, their ability to invest in buying products, they will spend time, in looking at products. So some of these behaviors are really important to keep in mind. So when we are thinking of marketing, we want to make sure our user is engaged with us. So we don't want a one-time transaction. We don't want to do, so we don't want to sell via discounts. We don't want to sell via hurry, Black Friday sale, let's do this. We don't want to create a negative sentiment in our user. We want to create a positive long-term sentiment so that, and because it involves money, it needs to always stay in the positive sentiment segment of your brain. So we have learned that inspiration really works. So if you see Mahila Money's social media, we actually put out stories of our users who have been very successful. So peer learning is a big thing in our ecosystem. When we are designing our marketing strategy, actually storytelling sits at the top of it. What can I put out that is a really good story for our user? It may have no message to buy. It may not even have a CTA to click or apply or do something. Like today, we've put out an article which talks about the licenses you need if you're setting up a food business. So there 3 sectors we fund massively. One is beauty and makeup, beauty parlors and makeup studios. Second is tailoring boutiques and clothes selling shops. And third is food businesses. So we put out a lot of things that are useful to our customer, is great content, has great stories. Like last week, we had a story of somebody who went from a really small business, comes from a conservative family, and now actually owns a commerce business, has a website, and is making products and selling them. So it's a big sort of battle. So for us, I think our marketing needs to reflect the ethos of our company, the ethos of our product. And for us, it's a lot of personable storytelling, things that our users can take back home when they're not on Mahila Money, when they're not in our ecosystem. But it's something that's a little bit of inspiration. And of course, community sits at the center of it. Engagement sits at the center of it. So content, community, conversations, storytelling, that's very central to our marketing. We do the traditional digital marketing and ad campaigns and all of that, but that's very tiny in our universe, like it's just bare minimum. For us, it's all about engagement, engagement, engagement. And we think that, you know, transactions come when users are engaged, when communities trust, the products that they're using. And we've seen this work many times in the past, not just for women, but elsewhere as well. But particularly going back to microfinance companies went deeper and they became hubs for the community. So that loan meeting where 5 women got together, there was a group loan dynamic there, but it became more than that. It became social conversation, it became learning, it became a hub for women's health, learning about sustainability or solar or better practices in the farms, whatever was relevant to that user. So I think relevant content and relevant conversations are, really the mainstay of how we think about marketing.
Good, amazing. And I agree with you completely. A lot of times I say not selling is the best sales strategy, because especially with women. Juan, one of the biggest funnel blockages we know for women is biased credit algorithms. I mean, at least for credit providing fintechs, right? That we know a lot of algorithms are biased and they reject more women than men, given a lot of particularities that are related to women. How have you addressed that at Juancho, and what has been the result to date? Just making sure you unmute yourself before you answer. Thank you.
Thank you. Sorry. So maybe one of the main blockers that you need to overcome when it comes to this is really, I mean, because the way in which you originate and the way in which you actually have an impact is with your risk model. I mean, when you're a personal loan company and you need to assess risk, I mean, you can have all the data you want and you can have all the right ideas, but if your risk model does not account for that, then, and that's when I was speaking about being decisive. Maybe that's the first part in which you need to be decisive when in a company like this. And from the very beginning, that or I mean, since this strategy started to become apparent and started being implemented, the first part in which we started working was the risk model, before marketing, before everything. Understanding two things. First, what the risk model usually labels as risky jobs, it's predominantly women jobs, or what jobs that are usually performed by women. And COVID had a large impact on this as well, because in Colombia, the hospitality sector, the restaurants, hotels, of course, I think everywhere in the world is the ones that were more affected by this, by the restrictions regarding COVID. And that is 70% women, here in Colombia. So you need to start understanding that, and we need to start accounting for that in our risk model, understanding that you cannot only look at the sector of the job, but you need to have your risk model to look at gender in order to understand other things and how are they gonna behave for down the road. Because even, I mean, if you control by gender, you're gonna start seeing a lot of disparities in the behavior of our customers. I think of many customers and financial institutions of the markets that like ours. So regarding job, regarding income, available income, or supposed available income, another insight that we found is that women usually have side incomes that are not reported in the banking system, which is of course in which the primary source of income that we rely, or source of income information that we rely on. But from our interviews and human-centered design spaces with women, we've come to understand that between 50 and 60% of them are actually engaged. I mean, of our customers are actually engaged on some sort of side activity that leaves them additional income, whatever it may be. I mean, it can be services. They can do like small services in the office or in the neighborhood or whatever. I mean, they can sell food on the weekends, stuff like that. It's very common. So I think understanding those things, but not only looking at the raw data and the big data, but actually going into detail and giving sense to that, has allowed us to do initially small experiments in the risk model, and then not all, some of those experiments have become permanent, and we've been able to scale up based on that. Yeah.
Amazing. Thank you. Alexandra, we talked about a common theme since the beginning, and a big word that's been, looping around, which is trust. So trust is one of the main factors that hinders women's uptake of fintech services. So as a fintech founder, do you see this, and how do you address it? And with your other hat, how can organizations and fintech associations like Colombia Fintech play a role in helping bridge that and build the trust for women and fintechs?
Yeah, that's a tough question, in terms that fintechs have this challenge for all the users, not only for women, but for the whole final users. So we try every day to build this trust. That is the most important thing that can address us to have more and more users in the future, and be confident that they can use our financial solutions for their behavior, for their challenges and their needs. So in the way that we build together as fintechs, in the way that we know that there are another example, for example, this one that Juan Diego is showing us that is a fintech that is helping women. These are the messages that have been, that need to be shared all the time between the different fintechs. And with the collaboration between fintechs, we can do a better work building this trust. So in the way that fintechs works together, showing how we are doing things, how we are creating financial inclusion, how we are closing gaps, in the way that we together build this trust and having the support of the Colombia Fintech Association, we can create something really, really powerful. So we need to work together as fintechs, as individual fintechs, but also we aim to have the collaboration and the support of the association to have like this more powered message, because we are showing the market how we are changing things and how we are creating a new space for women, how we are now bringing them tailored solutions for their needs, how we are giving solutions that are secure, that are trustable, that they can get access to technology. That's another challenge that women have, and that we are working on bringing them this type of solutions in which they can feel comfortable with technology, and also they can get financial aids or solutions adapted to their needs. So it's a collaboration between the whole ecosystem, and I think that's why it's really important to have. In my case, I'm working with I'm talking about with the two hats. But I think that if we take the conversation out of this, it's really important that we can have this environment together, considering an association that is supporting the ecosystem.
Thank you so much. So I'm going to start taking questions from the audience. I have a few already, and they're very interesting. And to the audience, in case you have questions, please put them in the chat so that we address them. Juan, the first question is to you. Apart from marketing, what is in terms of the loan that makes them more amenable and attractive to women? So is it the amount people qualify for, the interest? I know you already mentioned a bit, but maybe focus on that more clearly, or the allowance for repayment patterns, the qualifying terms, etc. So what is it about your product that makes it more attractive to women? What have you done to it?
Well, the most important things and the most direct thing is that it's cheaper for women. I mean, it's more accessible for women, between 8 and 18% cheaper on the monthly allowances that need to be paid. We are talking about loans that go from 12 installments up to 24. So when you compound 18% to that, I mean, it's a big difference in what women are paying for their loans. So I mean, that's the most probably most obvious of them all. But yeah, I mean, looking at the risk behavior, no, at the loan book behavior of women, maybe that's something that a lot of companies could do. So it's really also in the little things that you see that focus, because I mean, not many companies do this that we do. I don't know many in Colombia, at least. But then, for example, on our collections exercise, it's also, I mean, we are also conscious of these things in our collections exercise. We understand that, for example, women have different paying patterns than men. So sometimes, I mean, they're easier in our case that they don't hit the deadline, but they usually make their payment before going into, for example, a 30-day
grace period.
Yeah. So in that part, it's very important that they are usually on. I mean, they're not on time, for example, on their date that they're supposed to pay, but they a couple days later they always get their installment right. So that's very important, because I mean, as I mentioned, your collections need to be different. You maybe maybe after 5 days, no, maybe after 10 days you start calling and trying to understand what's going on. And also, you, of course, this is not only for women, but you also need to understand the history of your customer. If this is a customer that has been paying okay for 12 months and now, I mean, you cannot just go there and say you need to pay. You need to go there and understand what's going on, because at the end of the day, it's going to be better for the company as well. I mean, if you can restructure, for example, debt and then do whatever you need, that's also an approach you need to have with men and women on every single segment. But yeah, for going back to the question, the cost of the product, the collections strategy, and I would say that also we've tried to make we've made alliances with companies and retails that are very relevant to women. So that's another way in which we've tried to address this focus that we have. So yeah, there's a variety of ways. Of course, marketing is where it's more visible, but then it needs to impact every single aspect of the organization, and those are the three that I can come up with right now.
Perfect. Thank you so much. Sairee, I want to ask this question to you from Inez. So in several markets, like in Pakistan or Kenya, we have nano loans that eat microfinance institutions' lunch because they give away easy and immediate access to credit. However, they cannot be used for productive purposes because they're small and expensive, obviously. So what are you seeing as compelling fintech models and/or innovations on the lending side that can actually provide loans of decent sizes to these micro and very small enterprises?
Absolutely. So our learning has been very similar, that when loans are very small and very expensive, they're counterproductive. They actually do push a lot of people in debt traps because it's a pattern then that forms. We have actually seen two major changes from traditional microfinance approaches, actually. So I think there's nano loans, there's also traditional microfinance, which was capped. It was always capped at, but I think it used to be at $600. You couldn't get more loans bigger than that. And they were just group loans. So we are realizing we are now in a digital age. Payment stacks all over the world are very developed, so microfinance worked well maybe 30 years ago, 40 years ago, when the world was a very different place. Thanks to very strong digital rails everywhere, in India particularly, the user is natively digital. They use payments, they use social media, they understand commerce, they understand e-commerce, and we need to leverage that really, really well. The other thing we've realized is we need to productize loans. So for example, we actually have literally a 3x3 matrix in which we classify loans. And they start with literally the first loan actually starts where microfinance leaves. So our minimum loan is actually $2,000, which is really meaningful. So it's not a really small loan, and it's designed to serve a business of a certain size. It's typically an individual entrepreneur who wants to either buy equipment or assets or working capital for inventory for working capital. So we've productized a product. So for example, a lot of our users buy ovens, baking ovens, beauty parlor equipment, sewing machines. So we've de-risked ourselves by tying up with manufacturers who will give a discount when this user purchases the product. But it's a meaningful product. It's going to add a lot of productivity to her business, which means, there is income increase that we are mapping. And of course, the third loan we give is to somebody who's already set up a business that now looks like a company. It's called an SME loan. They probably have a small factory. They probably have a preschool or a yoga studio or a preschool chain, or they maybe have built a D2C brand on Instagram. Now, these are businesses that are now already like real P&L businesses. Their capital needs are very different. Their loans start at $10,000 and above, and they will go up to almost $30,000 now, which is actually a serious sum of money. And we figured that we need to sort of treat this user actually with a lot more respect and a lot more trust, and we need to sort of get a lot more uh, specific in designing for their needs. So we're going deeper with one entrepreneurs and their segment and the particular use cases of the product. So we're not leaving it open-ended to say, we'll just give you money and you just bring it back. Our job is to make sure they use it productively enough so that they can come back again and do it all over again, because business is also cyclical. So one of the products we do is called invoice discounting. You sell your products and sometimes your payment comes in 30 days. So you need money for 30 days to buy more stock. And we use some of these learnings around businesses to create very, very specific products, and then those are delivered as well very specifically. And I agree that very small loans are counterproductive, especially for a user who's sort of already ahead of the curve. Their phone is probably more expensive than the loan that we are offering. So we need to be cognizant of also, I think, the needs and the changing demographic profile of the user. So uh, I think, and that's where the opportunity is, because this is a massive opportunity. Like in India, we see that there are at least 150 to 200 million women who fall within this bracket: business owners, digital, not served by traditional banks because their business is too small, but not served by microfinance either. So we see that, this segment is being left out in the open, and official numbers say there's $158 billion credit demand for this segment only. So
And I'm sure that's where most women are.
that's where most women are, because most women, and it's also aspirations of the user, right? Nobody wants to stay poor, right? Even if I'm a poor goat farmer, my dream is to sort of run a business and be self-sustaining and continue to better my quality of life.
Yeah, definitely. Thank you for that. I have a question. It's directed to Juan, but I also would like Alexandra's take on that. So, Juan, the question to you is your company supervised by a financial sector authority, and how does the supervision factor into how you are able to play with your risk models? And then maybe, Alexandra, you can give us the association's perspective on that, on supervision. Juan?
Yeah, companies like ours in Colombia are not supervised per se by a financial sector authority. This is only for companies, I mean, mostly for companies that are that have products that involve savings. I mean, receiving funds from the public. So that's how the law works for this kind of companies in Colombia. I'm sure Alexandra has a lot more detail on that. But from that perspective, we are subject, of course, to rates. I mean, of course, the rates are supervised and are regulated by a central authority. But other than that, of course, there are laws against discrimination and everything. But other than that, we felt that we've been pretty free in our ability to test and to understand how our risk model can better impact the market and can better impact, of course, our business model, and can better serve our customers and potential customers. Of course, we understand that as we need to be very careful in when we are saying, okay, we are giving this kind of conditions to women, which are different to men. It's all based on a premise that women are underserved on the financial market in Colombia, heavily underserved, and also in the job market are discriminated against, and so on. So when you think about that, what you are doing is actually trying to level the playing field just a little bit, because of course, I mean, we are we're not the biggest institution by any means, but so you need to have that. You need to take into account. You're not doing this because you're being arbitrary, or you're being just you want to do it, or you just want to get a better pay at the end of the day. No, there are deep reasons for acting like this. And before thinking about the like the financial authority and so on, there's always, when we speak about many things within the company, there's an ethical conversation, because of course you need to be, before being subject to an outside power of the state or whatever, you need to think ethically, and each company needs to have like their ethics well defined, and based on that, it becomes much easier. We've never had any kind of trouble with the regulator because of that.
Perfect. Alexandra, can I have your take on regulating fintechs?
Yes, most of fintechs here in Colombia doesn't have a financial regulation. They have other type of regulation depending on which vertical they are. So, for example, Liquitech is regulated by Societies Superintendency. I don't know how to say that in English, but it's a different regulator than the financial one. But what it's important here is to point out that fintechs are opening a channel or opening a path for financial institutions to work with the clients that we are attending and we're understanding in the first time. So, for example, Juancho is creating scorings that are completely related or super designed for women. And then when he tries out that these scorings are working for sure, banks are going to be, buying these positions and wanting to have participation in the client that they have been developing, because they haven't been capable of developing this type of super specific scoring. So that's why, for example, in factoring, we are attending SMEs. We are trying to get financial solutions for those SMEs, and then we put them in the financial system, because at the end of the day, the banks are going to be our allies in this growing process. And that's our objective as fintechs: promote financial inclusion for all the people that now doesn't have access, because the banks or traditional financial sector doesn't have the channels to get to these people that now hasn't have the access to have this type of solutions.
Perfect. I have two questions which I want to ask very quickly. The first one to you, by Inez. It's a very quick yes/no answer. There is no compelling reason why others can't do risk-based pricing, correct? I mean, this is what you do, right? With 8 to 18% discounts. Yes or no, basically?
Yeah, that's what we do. I don't have any information on why others don't do it. I mean, for us, it makes sense, but we all have different focus on, of course, on the market. And of course, many companies choose to run their business also based on efficiency. For example, so if you can have a very standard product and then be very efficient on your internal processes. That's another way in which you can create a lot of value for your shareholders and for your employees and for the market. So it's different approaches. This is the one that we've chosen. But yeah, we're not. It's not every day that we see. I mean, there are institutions that are absolutely focused on creating bridges on that gender gap between men and women in the financial world. In Colombia, there are just a couple. I mean, there are a couple that I'm aware of. But other than that, companies that are not fully focused on that, yeah, they usually don't. I mean, it's very rarely that you see like a special or focused services or approaches on women other than marketing.
So final question, I need a 30-second answer. What would it take to get the big techs interested in gender intelligent design? Who's willing to raise a hand to answer that? Sairee, go ahead.
I think incentives matter. And also, the truth is, big tech, there's a massive broification of big tech happening right now, thanks to Elon Musk and Twitter, and it's moving in the other direction. But while that is happening, the core products like Instagram, YouTube have almost 60% women users. So we think that it's a matter of time, and of course, as we see some folks build large companies in the space, I think Elevest is a classic, breakout that we have. I think it's a matter of time. First Women's Bank, Chicago, Elevest. I'm definitely sort of rooting for some of these organizations. it'll get there. But also, my sense is that a lot of this is dependent on not just building for women, but also sort of making it inclusive, right? I think it's while companies like Mahila Money are building only for women, but we don't have to, right? We should be able to build gender gender equal organizations with enough focus. One point I would like to say is it's also how we build our companies. If men are building more companies by men for men, these are bro networks, then it's very hard to sort of break them. We do need more and more women in product design, in financial services design, and of course in capital design, because those calls get taken who gets funded. If that capital is not flowing down, then it's going to not change.
Thank you so much. I'm going to ask for 30 seconds from my audience. I want to wrap really quickly with lessons learned from my end, and then we will end the call. So one, really understanding how to build a gender intelligent value proposition starts with understanding your market audience. We heard this from the three speakers. So understand the demographics of the people you're targeting, look at the data that you have, make sure you try and get sexy segregated data, analyze it, understand how to analyze it, turn that information into valuable knowledge, and then build based on that, customize, and then make decisive actions. So all of the work that you do, if you don't decide and act on it, it's useless, basically. So get the behavioral insight, and then understand the differences. Women like to connect. Women need that education perspective. They need that engagement and that relationship building and that connection and the convenience. We talked about how you need to make your services easy and seamless, similar to how social media is today. We need to break down that big balloon of making finance seem so far-fetched and so far from reach. Make it more convenient and accessible, making sure that you also reevaluate your communication and you base it on what really matters, on inspiration and storytelling, and keeping it positive, and reflecting the values. And all three of you talked about it, having ethics and values, whether you are regulated or not. If you build it on morals and values and ethics, then eventually the spirit of your organization will be portrayed within your own products and services, and therefore will seem positive as well to your clients. And then finally, let's get women into positions where they can invest in fintechs, and that's how we will start seeing the world move towards a better place and the more gender intelligent one. Thank you to my three speakers. Thank you to my audience. This is our last FinTech Friday. I wish you all an amazing day, weekend, afternoon, and even end of year festivities. And so thank you so much to all three of you for really sharing so candidly, and for everyone on the call. Thank you for your time and presence. Thank you.
Thank you.
Thank you. Great session. Thank you.
Holidays.
Bye-bye.
Bye.
Bye.